Hey guys, and welcome. Hope you guys all having a good day, and today we're going to be talking about the inexact science of picking a stock. So it's an inexact science because there is no 100% way of knowing that your stock is going to do well. The market is genuinely horrible, and to be honest, there's never a way of you having no risk. Any investing has risk, and I think a lot of new investors especially kind of run and shy away from that risk. And if you ask any successful person who has ever made money in any business, any investment, to be honest, like, they've always lost money at some point. If you just ask them, have you lost money before? They'll always say yes. So the first thing you need to consider before researching stocks is what type of return you're looking for. So I've talked about it before on this channel, and I think it's kind of something that needs to be reiterated. You kind of need to look at what type of stock you're going for. So are you looking for a short-term return, a quick return where you try and double your money, whatever? Or are you looking for a long-term return where you hold your stock for the next 5 years, say, and then triple your money? Whatever you're looking for, no, that's up to you, but you first need to look at it and understand where you're coming from, what you're doing. So I think a lot of people kind of come into investing and they go, oh, I'm going to double my money overnight and whatnot. And yeah, I mean, that can happen, but it's very unlikely that's ever going to happen. And I don't think that's a very healthy way of going into investing. Just because I think a lot of people go into investing and they start off with very high risk, high reward investments, and then that kind of just deters them off, because like, if you've got a high risk, high reward investment, you're going to lose money at some point, and I don't think that's kind of a good way to go about it. Because I know in this channel, what we're all talking about is we try to mitigate our risk and make it as low as possible, while also getting our reward up here, just getting maximizing our returns. So the second point I want to make is, don't use money that you need. Please do this. So what I mean is, if you have $1,000 in your bank account and your rent is $1,000 a month, and you have right now you have no job because of Corona, do not invest that money. Use that money the way you need it to live your life. If you have money that you need it, don't. The only reason why you should be investing money is if you have extra money that you want to have make money, if you get that. So basically, when you are picking a stock, you are saying that you are smarter than the market. So what I mean by that is that when I pick a stock, I'm basically putting money on the fact that I believe that this stock will increase in the future. If you think about it, it's a different way of betting. So for those who don't know what stocks are, I'll give a very brief overview into what they are and how they work. So pretty much when you buy a stock, you are buying equity into a company. So the price that it will be listed at is the price of one share. And what will that do is the price of that one share will fluctuate up and down depending on the market. So actually, sometimes it doesn't even depend on the market. The market's so stupid sometimes, and it'll just go up and down for no reason, or not for no reason, but it'll go up and down depending on the sector, what's happening and whatnot. And the economy there's no way of predicting it, especially right now, what's happening. So what will happen is the company will pay you in a form of dividend as a way of thanking you for investing in a company. Usually that will be 2%, 3%, whatever it is. It won't be a hell of a lot, but if you have 10 different companies and they're all paying you 5%, at the end of the day, it adds up to a lot. If you're putting $10,000 in overall, that's $500. Like, it works out to be a decent bit. So the way that you profit from a stock is that as the price goes up and down, you sell and buy. So basically, you want to sell at the top and buy at the bottom. And then the difference between those two prices times by the amount of stocks that you own minus your capital gains tax that you have is the profit or loss that you make. So generally, finding a stock that you kind of want to start off with is kind of hard, because when you look at the thousands of stocks out there in the world, and like, it's just never a fun thing trying to go through a database, and it's just never a good thing you want to do. So I would recommend, if you're starting off, to go into a sector that you know, or that you at least have some interest in. So for example, I went into banks and business and stuff, banks and whatnot. And I started there, and I would steamroll through that, and then I went all around and started diversifying. So what you want to know is that in your industry, you want to know what they kind of do. So you want to look at the economy of the industry. You want to look at what your economy does, how is it fluctuating, what is it at right now. You just want to have a look at it and you want to see where it's at. So once you know your industry that you're going to look at, you're going to use filters in order to find a stock that you like. So what you're going to do is you're going to go to your app, your website, whatever you're doing, and when you search, you'll be on like the advanced search settings and whatnot, and then there'll be filters such as a P ratio and whatnot. And what you're going to do is, I would recommend that you research what each of these are and then figure out what you want. So for instance, I try and have a stocks that have a high ROE and a high cash on hand. So I kind of like a high cash on hand because it mitigates the amount of risk that I'm putting on myself, because if something happens within that company, I at least know that they have a lot of cash on hand in order to get rid of whatever happens. So once you find the filters that you want, what you're going to do is you're going to put them in and you're going to search within your industry. So what that'll do is that'll come up with a bunch of companies and stuff that you can look at. And what you're going to do is you are going to research the economy as the world economy, the economy of the country that you're currently in. Say you're in the USA and your trading route and whatnot is all through USA. You want to research the economy of the USA right now, and then what you're going to do is you're going to do a sector as well. So what's going to happen is a lot of the time there's going to be a correlation between all three of them. For instance, right now the world economy isn't too great along with most countries. So then, for instance, something like banks and whatnot are going to be hit quite hard because of that. So once you look at the trends and have analyzed what you have in front of you, you are going to look at what you need at your companies, or the companies on the list that you've had before. So you're going to do some research into these companies and look at where they have been in the past and where they might go. So you're going to look at, in your research, you're really going to look at any upcoming things that they have going on. For instance, I know a while back Telstra was wanting to put out the first ever 5G network in the 2016, I think, Commonwealth Games, something like that, or no, 2018 maybe, I don't know. But it was a while ago now, and I knew for me that was just like, maybe I might have a look into that or whatnot. So just have a look into in all those companies that come up on your list and see what they have going on in the future and whether or not you think that's gonna have an increase into their stock price. So once you have your list, you're going to break it down into the companies that you don't think are going to increase their stock price in the future and increase their profit margin. So you want to get rid of those, and you're going to be left with a bunch of companies left. So for instance, I'm looking at stocks right now in this way, and then I'm looking at, after I do all this, I'm saying, do I believe that they're going to get back to the same stock price that they were before Corona? And a lot of the times, yes, sometimes it is no. And you're going to just look at, hey, so for instance, this bank has gone down 300% and whatnot. And if I invest now, and I do believe it's going to go back up to that top where it was before, I'm making 300% plus on my investment. And it was quite good. It's just right now is a really good way, really good time, to invest in the stock market, just because the price is pretty much at a discount. So yeah, once you find your second list, go through what you think is going to get what is going to maximize the most out of your money, and you're going to invest into that. If you have a lot of money, I would say diversify. So I would diversify into different niches and different industries. So that is your best way of mitigating your risk. Alright guys, I think that's probably everything for today. I hope you guys have all enjoyed it, and it's been a really interesting thing for me to do, going through the way that I pick my stocks and whatnot. And I really hope you guys all enjoyed it. Have a good night.